Growth in developing East Asia and the Pacific is expected to accelerate this year as China's economy continues to reopen. A new World Bank report says growth in the region is likely to accelerate to more than 5% this year, from 3.5% in 2022. But the World Bank warns that major economies must now navigate a changing global landscape, including rising trade tensions, rapidly aging populations, and climate risks. The bank says deeper reforms, more proactive management, and international cooperation are key to addressing some of these challenges. And for more on the report, we're joined now by Aditya Mattu, Chief Economist, East Asia and Pacific Region at the World Bank. Thank you so much for speaking to us today. Now, this report, it highlights that growth in East Asia and the Pacific is expected to accelerate this year. So first off, what will be the drivers?
Growth in China. I think that will be the big driver. China, which grew by only 3% in 2022, is projected to grow at 5.1% this year, largely on the strength of the strong domestic consumption bounce back from the COVID difficulties of 2022. The rest of the region, which already saw that bounce back in 2022, is projected now from this higher base to slow down slightly from a growth of 5.8 to 4.9%.
You talk about the importance of China. China provided significant fiscal stimulus in 2022, and there are signs of revival in the country's growth. But, there are tensions, right, between Beijing and Washington. They continue to simmer. What impact will those fraught relations have on economies in Southeast Asia?
We highlight three big challenges that the whole region is going to face. One is, a lot of the growth in this region came in a world where markets were open, integrated, and governed by predictable trade rules. Now there's a retreat from globalization, there are trade divisions, and, political factors, uncertain political factors are creating broader uncertainty, which we think is ultimately going to be a problem for growth through trade. But we also highlight, as you noted at the beginning, the problems of rapid aging and the problem of climate change, to which the region is contributing, but also by which it is deeply affected.
The report mentions the pace of catch-up of some regional countries with higher income nations, ones that have stalled. So what happened with that difference? What can be done to make up for lost ground between those two types of nations?
The report looks at this quarter century since the Asian financial crisis and finds the striking fact that this region actually grew faster and more stably than almost any other region of the world, including the advanced economies. And that was its remarkable success. But we didn't see big structural reforms. And that's why productivity growth, and as you said, this rapid catch-up with high-income countries had stalled already, even before COVID struck. And then we have had these series of shocks, the pandemic, the war, and now financial tightening, and they're creating already new difficulties for the region. And looking ahead, it has these big looming challenges. So it's this confluence of slowing growth already, multiplicity of shocks, and looming challenges, which we fear could seriously hurt growth in the region unless there is a deep reassessment of the reform path.
Can you talk us through some solutions? Earlier you mentioned there's deglobalization, aging populations, climate change, of course, all casting a shadow over growth prospects for this region. What is the best way to tackle these headwinds?
First, a third country in the region, a small country like Malaysia, Vietnam, or even Indonesia cannot really resolve all the problems created by international trade tensions, and it cannot also make its own climate. And also the pace of aging is in some sense now an inexorable fact. So I think the big challenge here is how do you adapt to these changes in a way that's not antithetical to your own growth? Now, in each of these cases, the highest priority is domestic reform, reform of your own trade policies in both goods and services, as you've begun to see in the region, for example, also of investment policies in Indonesia and Philippines. But services remain relatively protected. I think services reform has to be key to productivity growth because a lot of people now leave agriculture and don't go to manufacturing, they go to services. So productivity in services matters for its own sake, but also because better, more productive services are good for the productivity in other sectors of the economy. So that's priority one. Then when it comes to aging, I think that also emphasizes the need for deeper fiscal rethink. This is a region which has relied on a small government, which is an enabling government. But I think the pandemic revealed that the state needs to play a bigger role for social protection, but also to lay the foundations for inclusive growth, whether it's investing in infrastructure, from everything from roads and ports to fiber optic cables, or remedying the deep deficiencies even now in the region where it comes to human capital. Education and health are surprising weaknesses in a region that has grown so fast. And finally, when it comes to climate change, we emphasize that the region must do its part to try and deal with global warming. But for the smaller countries in the region, adapting to climate change is the biggest priority. And we have systematically underestimated both the returns and to adapting investments in adaptation, but also analysis of how these investments are best made.
Aditya, you talk about the shift to services from manufacturing and its impact on productivity. Do you think economies have adequately braced for this transition?
I don't think so, because you have this curious combination, especially in a region which thrived through openness to trade and investment in goods. You have this persistent suspicion of openness in services. And that means that you have a persistence of protection, which doesn't always take explicit legal forms. It often takes the form of discretionary restrictions on investment, on data flows. And that is a big problem because, as you know, technological change is transforming services sectors from retail to transport to finance. And to harness that technological change for the collective benefit, the region needs to grasp the nettle of services reform.
All right, we'll leave it there for now. Really appreciate your time today. That was Aditya Mattu, Chief Economist, East Asia and Pacific Region at the World Bank.